Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld, and here are 3 or more things to pay attention to for the upcoming trading week. Now, as a quick review, we saw what happened last week with the earnings calendar. We talked about some of those FANG stocks. We had Google report on Tuesday, great earnings and also a 20-to-1 stock split. Hello, thanks for saving the NASDAQ on Tuesday. But Wednesday, Facebook was like, here, hold my beer, and all of a sudden tanked the markets with the worst corporate loss in the history of the financial markets in one day, losing over $200 billion worth of market capitalization in under 10 minutes. It was absolutely incredible watching that chart in the after hours. But then Amazon's like, well, hold on a second. Let me help out here, mister. I'm going to report amazing earnings. They beat earnings by over 600%. I think they were expecting like $3 in earnings. They came out like 27. It's unbelievable how well they did, and that ripped up the markets on our Friday trading session. So lots of volatility because of these big FANG stocks. Now, this upcoming trading week, we do have a lot of earnings, none that are in the category of an Amazon, a Facebook, etc., but there still are some big names. Let's take a look. Now, to be precise, there are 737 companies reporting. It's a doozy of a week, and I've just cherry-picked some of the bigger names. You can see starting on Monday, we've got Amgen, Take-Two Technologies, Simon Property Group, ON Semiconductor, and Tyson Foods. Tuesday brings you Alibaba, BP, Pfizer, and Alibaba here is in red because they've been supposed to report earnings for the past couple weeks, but they keep delaying and delaying, so I have it in red because they may not report, but they're scheduled to on Tuesday. Wednesday brings us Canopy Growth, CVS, Disney, Twilo, Teva Pharmaceuticals, GlaxoSmithKline, and the Chicago Mercantile Exchange, or the Chicago Mercantile Exchange Group. Thursday, we have Twitter, Aurora Cannabis, Coca-Cola, and Pepsi. So convenient, we've got 2 cannabis companies followed by 2 soda companies. Perfect, those go hand in hand, don't they? And on Friday, not to be outdone, we've got a couple more with Under Armour and Dominion Energy. Now again, there's 737 companies reporting. I just cherry-picked the big names. Make sure you check your earnings calendar because there's a lot of companies reporting. Now, one area of the financial markets that's very near and dear to my heart is real estate. I think it's an amazing asset to help grow your wealth over the long term, to generate income streams, etc. Now, one of the catalysts to help that industry move forward is interest rates, right? You want to see what that 10-year bond is doing. If the 10-year bond really starts to rise in value, that's going to start to put pressure on the housing market. And given that housing market is about 15% of GDP, that could have an impact on our economy going forward. Part of this giant chess game we call the financial markets. Well, this week, there are some pretty big things potentially happening on the 10-year. So let's go look at the futures market for the 10-year Treasury. As you can see here on the daily chart, the 10-year Treasury has been in a serious decline. Now, this is important because as the Treasury, the futures product that represents the 10-year Treasury, as that drops, that means that yields are rising. So remember, interest rates are going up. That means the price of these Treasuries are going down. And you'll notice that we actually broke through this lower area of demand on Friday. This is important because once you break through an area of demand, price will generally move to where it finds the next area of demand. And if these 10-year Treasury notes continue to fall, that means that interest rates are going to rise, thus having an impact on the housing market. Of course, that'll take some time to filter in. But let's look a little bit deeper. This is just the daily. Let's take a peek at the weekly chart. And you can see here, going back a couple of years on the weekly, we are coming into a very significant area of demand on this chart. And below that, there's a lot of free space, which tells me that if we can break below those levels on the 10-year Treasury, that yields are going to spike, yields may spike significantly from that point. So this is something to be careful of because if we do get a big spike in the yields, the equity markets will not like that. It would be a very negative thing for the equity markets, adding a whole new layer of volatility to it. All right, the last one. Let's talk about oil. Crude oil to be specific, black gold, Texas tea. Well, this is one of my favorite topics because I'd like you guys to imagine a job. Pick a job where you can be so unbelievably wrong and still keep your job. Let's say, for example, I'm a weather forecaster. I live here in Southern California where the average year-round temperature is about 73 degrees. And let's say on my forecast, I forecast that the temperature for Irvine, California is going to be negative 3,862 degrees. You're like, that's not possible. Why would you be that far off? You know the averages. This is exactly what the Energy Information Administration has been doing with crude oil forecasts. So let's go look at a chart of the forecasts themselves. What you see here is the reports by the Energy Information Administration, the EIA, regarding their expectations of crude oil inventories in the number of barrels. Now, as you can see, there's 0 on the hard right edge there, and those little blue bars represent the actual reported numbers, And the little dashes there, I think they're in gold or orange, represent the expectations. Now let me give you an idea of how off you can be and still keep your job and apparently be respected. Here, going all the way back in, I think this is 2019, you can see that that little orange dash in that red box is at negative 1.3. That means they expected the supply of oil to drop by 1.3 million barrels. Okay, great. They obviously have access to information. In reality, it came out as nearly 23 million barrel surplus. Oh, hold on a second. So you're telling me that the analyst who covers oil was expecting there to be a drawdown in crude oil inventories of 1.3 million barrels. Now just put that in perspective. A barrel is an enormous thing of oil. It's not a little Pepsi can. If I took 1.3 million barrels, I could probably fill a football stadium. And the analyst was expecting there to be a contraction, supply going down by 1.3 million barrels. Instead, they had 23.2 or 23.3 million barrels surplus. That's a discrepancy of nearly 25 million barrels of oil. I'm going out on a limb and saying I could probably fill every NFL football stadium in the United States with barrels of oil and maybe still have some left over. That's how gross the error was here. All right, well, I'm not working for the EIA, so let's move on from that one. You can see at the very top of your screen there, that inventory number comes out Wednesday at 10:30 a.m. Eastern Standard Time. And right now, the hard red edge of this chart is the important part, because what it's showing is a consistent supply contraction, meaning there's less and less supply. Now, why is that important to us? Because if you look at the price chart of crude oil, you'll see that oil has been soaring since September of 2021, up 49%. And as we know, one of the things we talk about in the classes at OTA is the trend is your friend until the bend at the end. You don't see much bending going on in crude oil. So if those supply numbers continue to come out at a drawdown, meaning there's less and less supply of oil, where's oil price going to continue? Probably going to continue on up with high probability. Now, that doesn't mean run out there and buy oil. Develop a plan. Most likely, if something's in an uptrend, you should be looking for pullbacks into a solid demand zone. If something's trending down, you look for rallies back up into supply. Very simple strategy, but make sure you have a plan because this crude oil chart looks very, very tempting, but anything can change very, very quickly. Keep your eye on that announcement for crude oil because it could create a lot of trading opportunities. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.